Tesla, you have auto manufacturers, auto analysts following them, right? Absolutely the wrong analysts. You need robotics analysts, you need energy storage analysts, you need artificial intelligence analysts, you need software as a service analysts, over-the-air software updates. You need all of those. The auto analysts are not equipped to analyze Tesla. And they're very good at what they do. It's just that Tesla and EVs, autonomous EVs, are not what they do. We want our companies to invest aggressively now. The more they invest now, the better shot they have of capturing the lion's share of whatever market they're going after, because so many of these exponential growth opportunities are powered by artificial intelligence, and the companies with the largest amount of data and the best data and the best understanding of how to label the data are going to win.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Today I'm reacting to a few clips from a fantastic interview with Cathie Wood of Ark Invest by The Breakdown. There's a link in the description to the full interview. It's a wide-ranging conversation, including some discussion around Bitcoin, but in this video I'm just going to focus on the Tesla-centric content. So let's see what Cathie had to say. But first, hey guys, if you live in the US and would like up to 2 free stocks valued up to $1,600 each, use the link in the description to WeBull and deposit $100 in your account. Each of these stocks will be a minimum of $8 in value, so if you suck at math, that is a 16% ROI on $100. Not bad. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
I mean, Tesla is the poster child there. It's shocking, that at 400 billion-ish in market cap, it's still not in an index. It's kind of crazy. It's nuts.
Kind of absurd to think about, isn't it? Tesla's worth nearly $500 billion, and none of the indexes out there actually capture ownership in this company. Like, what's going on, guys? Are your indexes broken?
Research departments are not set up this way. In fact, what you see in research departments, or what you would see is, and you probably do see when it comes to Tesla, is Tesla, you have auto manufacturers, auto analysts following them, right? Absolutely the wrong analysts. You need robotics analysts, you need energy storage analysts, you need artificial intelligence analysts, you need software as a service analysts, over-the-air software updates. You need all of those. The auto analysts are not equipped to analyze Tesla. And yet, I don't know this for sure, but my guess is they are fighting to keep control of Tesla. It's a big stock, it's a big market cap now. They can't pull the trigger and put a buy on it, but they want to cover it. But they can't cover it. And they're very good at what they do. It's just that Tesla and EVs, autonomous EVs, are not what they do.
Ooh, burn from Cathie, but I completely agree. I've said many times on this channel, far less politely, that the Wall Street analysts on average have absolutely no idea what they're looking at when they look at Tesla and try to analyze the company and talk about the stock. That's why they've missed the mark on Tesla stock so consistently for so many years. Meanwhile, crazy people like Cathie are out in the media a few years ago talking about multi-$1,000 price targets, getting laughed out of the room. Next minute, Tesla stock 10x's in the span of less than a year, and everyone's like, well, hang on a minute. Let's upgrade our price target even though we don't know why we're doing that. Yep, and let's keep upgrading it while the stock keeps going up even though we don't know why we're doing that. And yeah, we'll just keep upgrading as the stock goes up because we still don't know what we're doing because we're not capable of analyzing this stock because we're not qualified. We think it's a car maker. It is not.
So you see the disconnect in the market and why the inefficiencies in terms of valuations are so large. It's because of that dynamic.
Where did this conviction start to come from? What has reinforced it over time?
So you asked, and I did not answer completely, the analyst question, how we put our research out there. So our analysts have domain expertise for the most part in the new world, one foot in the new world. Why? Because they've just been educated in CRISPR gene editing and have experimented with it themselves, or they've worked in the industry. I mentioned James Wang coming from NVIDIA. Well, NVIDIA is the AI chip company. James already had a wide network in that space. It has grown even wider because of how we do our research. First principles is, okay, what is an autonomous vehicle? That Tasha Tasha, Sam Corris, who follows battery technology and robotics, Tasha, and James Wang, who follows artificial intelligence. The three of them work on that model together. So think about that. Very collaborative, no turf, no turf fights. In fact, we're all trying to seek the truth. That's our mission.
This is why I love Ark Invest so much, and why for many years I entrusted them with some of my cash. I actually invested in the Ark W and Ark Q funds, and until recently I had to sell because I was buying Tesla, big dip, no cash. What are you going to do? But for a couple of years I owned those stocks, well, those funds, and they performed phenomenally well. I didn't just wake up one morning and decide I'm going to buy the Ark funds. I came across them, came across their research, saw their thinking, realized we're on the same page and they were thinking about the same things. And effectively, the funds they'd built were like a scaled down version of the portfolio I wanted to build for myself. So I thought, you know what, save a bit of time, I'll just buy the Ark funds. Performed phenomenally well. Just imagine gathering a group of the world's best chefs and then asking them to perform neurosurgery. Or they might be masters of their domain, capable of inducing mouthgasms with their culinary delights. They're probably not going to know how to perform surgery on a human brain. This is kind of what's going on in Wall Street. Most of the analysts that are on Tesla are not capable of doing the job. I'm sure they're very smart at other things, but they're not qualified for Tesla. They're like a chef trying to perform neurosurgery and they're pretty much killing the patient. They've been so wrong, it's embarrassing.
And everybody saw our trades. They're beginning to understand that we are lying in wait for misperception and controversy to visit a stock. And we will buy. So we are a liquidity provider in the marketplace. That's why we don't mind being transparent with our disclosing our stocks at the end of every day, or our holdings, and our trades at the end of every day. Because if a stock is getting beaten up by some short-term thinking, we are usually there picking it up. And we don't mind company when it's down 20, 30%, you know.
This transparency is another reason to really love what Ark do. I highly recommend you guys and girls go and sign up for their daily trade alerts just to see what's going on as a good learning tool. Now, just keep in mind though, for example, if they have a buying limit of 10% on a stock, meaning they can't buy more than 10% of one fund in one single stock, they can hold that stock for a little bit longer, ride out some growth, but at some point they'll actually trim that position down to 10% or less. So often you'll see Ark selling a stock that's gone on a really strong run in terms of growth in price recently, only to buy again later when it dips back up to that 10% mark. So don't be fooled, don't misinterpret, and don't project or invent meaning where there is none. If Ark's selling a stock, it doesn't mean their investment thesis has changed. It means there's an opportunity to trade around the volatility and they're taking advantage of that. Or it means that a position they bought up has now exceeded their buying limit and they need to trim back down.
We want our companies to invest aggressively now. The more they invest now, the better shot they have of capturing the lion's share of whatever market they're going after, because so many of these exponential growth opportunities are powered by artificial intelligence, and the companies with the largest amount of data and the best data and the best understanding of how to label the data are going to win.
Full self-driving, anyone?
And so these are winner take most. And if we're on the right horse, as I think we are, just to go back to your Tesla or our Tesla, I think they're in the pole position for the autonomous taxi network in the United States. And we're even surprised in China at how well they're competing against the Chinese incumbents. And we're trying to figure out, wow, could they get a piece of that autonomous action as well? That would multiply the opportunity manyfold where we are right now.
I'm really fascinated to see how this race to solve full self-driving plays out. I mean, I have absolutely no question that Tesla has won. But the big question now is, how much have they won? Does being first to solve autonomy in the United States mean they totally dominate that market, winner takes all? And the other question I have is just how generalized is this solution going to be? Those of you who understand what Tesla's doing with full self-driving understand that they're trying to solve it at a general level. But the big question is, if they solve it in one region, whether it's China, the United States, or somewhere else first, how easily transferable will that data be in terms of solving the problem in a different country with slightly different road rules, slightly different roads, slightly different signage, etc.? I'd love to know what you guys think below. Let's just say that Tesla solves autonomy in country A. If they transfer that solution across to country B, how much of the way there are they to solving full autonomy in this new country? Are they 50%, 90%, 95, 99? Like, What percent do you think? Of course, it's all pure speculation, but hey, the wisdom of crowds has something in it, so you never know.
So our investment time horizon is 5 years. And the minimum hurdle rate of return for any stock to get into our portfolio is a compound annual return of 15%. So that's a doubling over 5 years. That's our minimum hurdle. So when we see short-term trading, if you watch our trading, you'll see we are, as I said before, a liquidity provider. We'll be very opportunistic around it. And just to give you an idea of how productive that can be, if you look at just Tesla, let's just take Tesla in 2018, which was a down year for the market. Take away Tesla's performance, which actually was up for the year, but take that away and just look at the contribution to return that our trading accounted for. In 2018, it was 175 basis points in a down market. And I believe in 2019, it was roughly 200 basis points, right? So in a market where many think as we're seeing from the S&P 500, we're up 5-6% for the year in the S&P 500. If you can get one stock like a Tesla, and we do this for all of our stocks, to deliver, 175 to 200 basis points just because of wild trading, that's nice alpha generation, right? If alpha is a portfolio that does not trade around opportunities compared to one that does trade around opportunities.
I mean, it's pretty hard to argue with Ark's returns. Some of their funds over the past 5 years have put on 200, 250%. Others more than 400% returns in a 5-year period. Incredible results. I mean, you really can't argue with those. And the reason that Ark has been so successful, in my opinion, is because they're investing in disruption and innovation. Stuff that is surprising, that is volatile, that out of nowhere suddenly can provide a huge explosion of growth. And at the same time, a small change, a bit of FUD, a setback can cause things to tumble. Now, I'm personally a buy and hold investor. I don't have the time or the energy or the brain power or the research team to even try to trade around volatility like Ark, but the results speak for themselves. As many of you know, Tesla is by far my largest stock holding, and Ark Invest can say the same among their funds. Their biggest position is Tesla stock. We invest in a different style, but for the same reasons in this company: disruption and innovation. The thing about disruption is if you don't pay very close attention and simultaneously know what to look for, it's very easy to miss what's going on. That's why there's a few folks like myself and Ark and others out there who notice and see and are talking about this huge disruption that's happening. It's still early days. That's why we see so much future potential in Tesla stock versus a lot of the mainstream finance media and Wall Street analysts who are scratching their heads and talking about the fact that Tesla's only selling 500,000 cars a year. How on earth can they possibly be valued this way? When you hear those kind of comments around Tesla, it is a dead giveaway the person asking the question simply cannot see the disruptions happening before their very eyes. What are you going to do? The way I like to think about it is if I can see something that you can't see, I have more information, and by its very definition, that means I can make a more informed decision. And when it comes to investing in companies, in stocks, etc., I only act when I believe that I have more information than the wider market. And that's why I continue to invest heavily in Tesla stock today, even though I'm paying about 10 times as much to buy Tesla stock now as when I first began investing a few years ago, because I personally believe that I have more information than the wider market still. I'm seeing things, inevitable disruption and change that most of the market still is completely oblivious to. It's no accident that Tesla stock is the only stock I have purchased for the last 3 years. Every time I had spare cash, I bought Tesla stock. This wasn't because I was just hoping to get lucky. It's because I was looking at the stock and seeing what was going on and looking out into the future and seeing that inevitable disruption taking place and being like, guys, do you not see what I'm... Well, okay, well, I'm just going to keep buying the stock. I mean, it's pretty much why I started the YouTube channel, to be like, guys. And a massive shout out to everyone over at Ark Invest. You guys and girls do a fantastic job. To everyone watching, if you want to learn more about disruption, innovation, etc., I highly recommend you head over to the Ark Invest website and check out some of their research. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and stake using the links below. Open a new WeBull account, deposit $100 and you'll get 2 free stocks valued up to $1,600. And stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.